if you go back and look at the prior bull markets of the last 50 years in gold, silver tags along, but quite often during a lot of that bull market, silver flip-flops around. But it's late in those bull trends that silver goes below.
Imagine waking up to a world where silver, a metal once hovering around $24, is now valued at a staggering $689 per ounce. Sounds like a fantasy, right? But hold on, this isn't a script from a sci-fi movie. Recent market tremors are hinting at a seismic shift that could turn this fantasy into a startling reality. With investors scurrying to safe havens and central banks altering their asset bases, we're standing on the cusp of a financial revolution, and silver is right at its heart. Today, we're going to unravel this mystery. How could silver, traditionally a modest player in the precious metals market, potentially skyrocket to such an astronomical figure? Stay with us as we decode this puzzle piece by fascinating piece. And don't forget to hit that subscribe button to join us on this thrilling journey through the world of finance. Together, we'll discover if silver really can reach the dizzying heights of $689. Welcome back to our deep dive into the silver market, where every fluctuation tells a story, and today's tale is nothing short of extraordinary. As we speak, silver lingers around the $24 mark, a price point that has become a battlefield of investor sentiments and economic forecasts. But why is silver, a metal with such a storied past, now struggling to break past this barrier? Let's peel back the layers of this complex market dynamic. First, consider the global economic context. In times of uncertainty, investors flock to safe haven assets, and recently, the US dollar has been the sanctuary of choice. This surge in dollar demand casts a shadow over commodities like silver, but this is more than a simple tale of supply and demand. It's a reflection of a world grappling with economic upheaval, where traditional investment havens are constantly being reassessed. Now let's zoom in on the key economic indicators that are influencing silver's journey. The US Federal Reserve's recent decision to hold interest rates steady has set ripples across the financial world. This move, aimed at stabilizing the economy, also impacts how investors view precious metals. With interest rates unchanged, the dollar strengthens, making dollar-denominated assets like silver less attractive to international buyers. This delicate balance between interest rates and currency value is a crucial piece of the puzzle. But there's more. The manufacturing PMI and labor market data, key indicators of economic health, are showing signs of strain. With manufacturing activity wavering and the job market in a state of flux, investors are understandably nervous. These macroeconomic factors contribute to the market's temperament, swaying investor confidence and, in turn, affecting silver prices. Additionally, the technical analysis of silver's price movement offers insights into its future trajectory. The formation of a head and shoulders pattern on the charts is a classic signal in technical analysis, often indicating a potential reversal in trend. If this pattern holds true, we could be on the brink of a significant shift in silver's market value. Let's not forget the broader geopolitical canvas. Events like the UAE's decision to move away from dollar transactions in oil trade and the increasing influence of the BRICS nations are reshaping the global financial landscape. These countries, rich in natural resources, are advocating for a new financial order, one where precious metals could play a starring role. As we journey through this intricate web of economic indicators, geopolitical shifts, and market psychology, it's clear that the story of silver is far from simple. It's a narrative woven with threads of global finance, investor behavior, and economic policy. And if you're finding this analysis enlightening, make sure to hit that subscribe button. Our channel is dedicated to bringing you the most comprehensive and up-to-date financial insights, helping you make informed investment decisions. In our next segment, we'll delve deeper into the global financial shifts and how they're setting the stage for a potential paradigm shift in the value of silver. Stay tuned as we uncover more layers of this fascinating market saga.
Reality, they're never ahead of the game. And in our view, they created a dozen-year-plus bubble in the stock market. Never before been seen of that dimension and duration. The S&P went up 7-fold, NASDAQ 100 went up 16-fold, okay, over a period of 12, 13 years, 2009, 2021, or early 22 for some indices. We're now back in price at some of those levels. S&P is back near the high it made above 4,800 in early 2022, and NASDAQ 100 has nipped out its high. It occurred, I think, in late 2021. But right now, this enthusiastic buying that we're seeing, I've never seen such frothy, absolute fearless sense of, I gotta be there, okay? And yet it's historically, archivally incorrect. If you go back and look at the last two major bull market peaks that are on those charts, you'll see the S&P peaked in 2000, By the way, after a period of rate rises by the Fed, they quit raising rates in May of 2000. And the market, in July, they came out with a statement, the Fed did, that we see some softening. It was one of these hint type statements, meaning we're not going to raise anymore. Okay. So that was in late July of 2000. In August, it shot up and made a new high monthly close for the S&P, based on that assumption, no doubt. Oh boy, the rate cuts are over. Party time. Okay, that was the top, period, exclamation point. And in January of 2001, as you were rolling over very early in the bear market, they started cutting rates dramatically, yet the market collapsed. Now, if you look at that chart, what you'll see is the overlay of the T-bond market as it rises and falls, meaning when it rises, rates are dropping. When it falls, rates are rising. Okay, it's inverse to rates. And look at the S&P 500 monthly below it. And you'll see that basically around the times that the T-bonds bottom and turn up, meaning rates are starting to drop, that's when the stock market peaks. And all during that bear market of 2000 to late 2002 in the stock market, the bonds went up, totally opposite what the current logic is. And then you go over there to 2007, further on the right of both charts, and you'll see that the S&P made its final high in October 2007. Well, that's actually a few weeks after they had cut rates in September, after a period of rate rises in a couple of years before. So they cut rates and the market peaked. In other words, if you'd have shorted the S&P about 3 weeks after the Fed cut rates in 2007, you'd have shorted the top. Okay, so here we have an instance where both the prior two bull market peaks in the stock market were coincident, inverse to the rate direction, which is totally opposite the current logic is, oh, they're going to pause, and two, they're going to cut rates. We know that. They already said to cut 3 times next year. So the only debate is when and how many times. And so the party's on. But it's just like those prior tops. Yes, there was a brief party on that assumption, but it was the top. So if that's your assumption driving your rationale of buying the stock market, think twice. History says no.
Let's dive deeper into the swirling currents of the global financial ecosystem and how they're reshaping the future of silver. This journey takes us beyond mere numbers and charts into the realm of global economic shifts and their profound implications. Our exploration begins with the central banks around the world. There's a growing trend among these financial titans to reduce their reliance on the dollar and turn their gaze towards commodities. Why, you ask? The answer lies in the quest for stability and value preservation. In a world where traditional financial instruments are increasingly seen as volatile, commodities like silver offer a tangible, enduring alternative. This shift isn't just a minor adjustment, it's a tectonic movement towards a new era that values tangibility and transparency over the opaque nature of debt instruments. But what does this mean for silver? To understand this, we need to consider the historical context. Traditionally, silver has been a secondary player to gold in the precious metals market. However, with central banks diversifying their reserves and increasing their holdings in silver, the metal is gaining newfound prominence. This isn't just a passing trend, it's a strategic reevaluation of silver's role in global financial narrative. Now let's bring in a perspective from the market frontlines. We recently had the opportunity to sit down with Andy Schekman, a seasoned expert in the precious metals market. His insights paint a vivid picture of the current market dynamics. Schekman points out the significance of recent changes in the precious metals market, particularly how geopolitical and economic shifts are influencing investor behavior. He emphasizes the importance of looking at the bigger global picture, noting how American media often neglects crucial international events that are key to understanding market dynamics. But this story isn't just about cold, hard economics. It's also about people, about how these global shifts touch our lives. In a personal anecdote, our host shares a family experience reflecting on the birth of a new generation and how the evolving work landscape, with its shift towards remote work, is impacting sectors like corporate real estate. This isn't just financial analysis, it's understanding how these changes affect us at a personal level. And speaking of global perspectives, let's turn our attention to the international oil trade. A recent groundbreaking decision by the United Arab Emirates to stop accepting dollars for oil payments has sent shockwaves through the financial world. This move, coupled with a surprise visit by Putin to the UAE and Saudi Arabia, hints at significant geopolitical shifts. These events are not isolated. They're part of a larger narrative where countries are seeking greater autonomy and stability in their financial dealings, often turning to commodities like silver as a viable alternative. So, what does all this mean for you, our viewer? It means that to fully grasp the potential of silver's surge, you need to keep an eye on these global developments. They're not just news items, they're indicators of a shifting financial landscape where silver could emerge as a key player. And if you're enjoying this deep dive into the world of finance and want to stay updated on these dynamic developments, don't forget to subscribe to our channel. We bring you the latest insights and analyses, helping you navigate the complex world of investments. In our next segment, we'll explore the role of emerging economic powers like the BRICS nations and how their growing influence could further catalyze silver's ascent. Stay with us as we continue unraveling this fascinating financial saga. As we delve further into our exploration of silver's potential ascent, it's crucial to understand the emerging forces reshaping the global financial landscape. One of the most significant developments in recent times is the growing influence of the BRICS nations: Brazil, Russia, India, China, and South Africa. These countries, rich in natural resources, are not just passive players in the global economy. They are actively crafting a new financial narrative, one where commodities like silver could play a pivotal role. The BRICS nations are making bold moves to assert their influence. They're challenging the traditional financial order, advocating for a system that better represents their interests and those of other emerging economies. This shift is not just about economics, it's a statement of geopolitical intent. As these nations gain more clout, they are increasingly leveraging their natural resource wealth, including precious metals, to fortify their financial positions. India's recent large-scale purchase of silver is a case in point. This isn't just a transaction, it's a strategic move signaling a broader trend among central banks to diversify their reserves. By increasing their silver holdings, these banks are not just hedging against currency volatility, they're also making a bet on the metal's future value. This trend is a strong indicator of the growing importance of silver in the global financial system. Now let's turn our attention to the misinformation and media coverage surrounding these developments. There's a growing critique of the mainstream media for not providing accurate information on crucial topics like inflation, financial stability, and the real economic situation. This gap in reporting underscores the need for a broader perspective, one that goes beyond the narrow focus of traditional financial news. It's a call for viewers like you to seek information that paints a complete picture, especially when it comes to understanding the complex dynamics of the precious metals market. As we look towards 2024, the conversation around financial preparedness becomes increasingly relevant. With market volatility on the rise, the need for solid investment strategies becomes paramount. This is where precious metals, particularly silver, come into the picture. Investing in silver isn't just about riding a wave of price surges, it's about having a secure, tangible asset that can withstand economic upheavals. In the realm of real estate and banking, there are mounting challenges. The commercial real estate sector, for example, is facing a transformative period reshaped by changing work habits and remote work trends. Meanwhile, the banking sector grapples with issues like the adequacy of FDIC insurance and the implications of regulatory frameworks like the Dodd-Frank Act. These sectors' health is a key indicator of broader economic stability and has direct implications for investment strategies in commodities like silver. As we approach the end of our exploration, it's clear that the story of silver is deeply intertwined with these global economic and geopolitical shifts. The potential for silver to reach new heights is not just based on market speculation, it's rooted in fundamental changes in the way the world views and values commodities. Don't forget to subscribe to our channel for more in-depth analysis and insights. Stay tuned for our final segment, The Apex, where we'll bring all these threads together to understand how they could catapult silver to the unprecedented level of $689. Join us as we conclude this fascinating journey through the world of silver and its place in the ever-evolving tapestry of global finance. And now we arrive at the apex of our journey, a moment where we piece together the intricate puzzle of the global financial landscape to understand how silver could potentially reach the astounding price of $689. This isn't just a speculative leap, it's a conclusion drawn from a careful analysis of all the factors we discussed. Let's start by synthesizing the key elements. The shift in central bank policies towards diversifying into commodities, particularly silver, is a significant indicator. This isn't a mere trend, it's a strategic move reflecting a deeper understanding of the value and stability that precious metals offer in a volatile economic environment. When central banks, the powerhouses of the financial world, start accumulating silver, it's a clear sign of their confidence in its future value. Then consider the geopolitical shifts, the growing influence of the BRICS nations, and their advocacy for a new financial order, one that emphasizes commodities cannot be understated. Their actions, such as India's massive purchase of silver and the UAE's decision to move away from dollar-denominated oil transactions, are not isolated events. They are part of a larger narrative that is gradually reshaping the global financial ecosystem. Furthermore, the misinformation in mainstream media coverage and the lack of accurate reporting on crucial financial matters emphasize the need for individual investors to look beyond conventional news sources. This is where critical thinking and a comprehensive understanding of global events become essential in making informed investment decisions. Now let's talk numbers. The current struggles of silver around the $24 mark might seem like a far cry from the $689 prediction. However, in a context of increasing market volatility, geopolitical upheavals, and a paradigm shift in financial systems, this prediction becomes more plausible. The potential for a dramatic surge in silver prices is rooted in a combination of supply-demand dynamics, investor sentiment, and most importantly, the changing role of silver in the global financial narrative. As we look towards 2024 and beyond, the landscape of investment and financial stability is undoubtedly changing. In these times of uncertainty, silver emerges not just as a safe haven, but as a strategic asset with the potential for significant appreciation. It's a compelling option for those looking to diversify their portfolios and safeguard their financial future. In conclusion, while the prediction of silver reaching $689 might seem ambitious, it is not beyond the realm of possibility. Given the convergence of economic, geopolitical, and market factors, this scenario could very well unfold. However, remember, this is not financial or investment advice. Always conduct your own research and consult with financial experts before making any investment decisions. And that wraps up our deep dive into the potential surge in silver's value. If you found this analysis insightful, don't forget to subscribe to our channel for more in-depth financial discussions. Join us as we continue to explore the fascinating world of finance, helping you stay informed and prepared in these dynamic times.